All right. So finally, I have something to say about the market. We had ourselves a real nice bullish low with some great earmarks. And now we finally have some stuff to talk about. So I'm going to talk about them. First of all, let's take a look at what happened over the last couple of days. This is an amp change. We had a frequency that was very wide, and then we got this much closer amplitude. This is important because amplitude and tension implies where it can go. So if your amplitude is just, doing this kind of thing along, you could say, well, what are you going to bring it down? The amplitude's not moving. And we see this a lot as just a structural thing to notice. It's that you drive the amplitude down and you can't get tension down to zero. And we see it a lot in trending markets where you'll see this just drop. And we've seen that through this area. This is the biggest deal to pay attention to, and I'm pointing it out first because I think it gives a good structure for what's going on. The next thing that I want to look at is the intraday market. Yeah, how did the game go? We had sort of this channel thing going on, which is a common trend behavior, and we pushed up. It was pretty aggressive. I think a lot of people would agree that today was just insanely aggressive. Looking at this, watching this chart develop, it was just like, wow. So it was just a really aggressive day. Now let's take a look at the bulls and the bears. And this is, it was Matt was asking me about what these are. I'm just marking out where I see liquidity. It's not in real time. It's just when I have a minute to mark it out, I'll go in and mark it. I don't really want to mark it in real time because I want to give you the chance to mark things out so that you can do it without my assistance, but I've been marking those out. That's what these are. So you can see, they're just the spots. So the first one, we have decay shoots up, trapped orders comes in, and there's our sample. Now, if you were looking at this and you thought, oh, velocity was down, is that a bullish sample? Well, no, I only use those if we were anticipating velocity getting to zero and then it crossed over in the morning. Then I'll look at those, but because we didn't have that situation yesterday, I'm not looking at it. Today was impossible. If you were not already in a long position, you could not get in this morning with this strategy or this analysis. The bears got their sample off the open, and you could see right here that there was a little bit of impact when they had a price response and they had tension bring this down. So we know that they're sitting there, and so you draw your stop up a little bit higher, and that's where their stops are. It came down and came right back up. Something happened right here. They failed. They pushed it down, and it was just bullishness. There was no liquidity sample here. If you were not already long, this didn't provide you a way to get in. This is so difficult. So we pushed up, and you could see we accelerated. It liquidated those guys into another bearish sample, and that pushed up higher. And you can see there was a little bit of an acceleration right here up at this high here. This group knocked out again. They didn't really hit the second time, so maybe shadow traders on that one. This is the group that really got in trouble here. So this is going to be, like a pivot in the market. You don't want to pay attention to this spot right here. I'll mark it. So those bears came in and did their best and just got obliterated by no one. Well, the market moves forward, knocks out the second group, and the bulls come in, the bears come in, the bulls come in, the bulls come in. And you can see right through here, this is interesting because it looks to me like the bulls finally come in and have some really strong impact. They're hitting, tension's moving, and it pushes up just to the back side of these bears right here, and it comes right back down for another spot. And of course, this is a secondary, so you are looking for teeth. But I thought that was a really interesting thing to see. We've, the bulls coming in, the bears coming in. Right here, if you have the bears doing their best to hit, there's a little bit of response right there on tension, and they don't really hold them underwater. They don't do a whole lot there. So it looks to me like these bears might be feeling pretty noble. Noble, you know, they'll be like, hey, we won. I don't think that's what's going on, but that's what they're going to be thinking. We move down, we get another sample right here. You see crossed under. There's the trapped orders. And that's another sample. Now, in this one, and I think because of this right here, these guys decided to just step back. So in this instance, you have to be saying to yourself, well, is 50% tension getting kind of high? Yeah, it is getting kind of high. We're even down a little bit, but if we did this another day, we'd be looking at 70%. And you get up to the 70% area and you start having to have a reason, like a reason. Why are we getting so much tension? So if you're not getting like some market thing that's terrifying people, 70%'s just too hot to handle. So we're getting to the point up here in the 50s and 60s without some big breaking news event. I mean, sure, we've got stimulus checks coming in and stuff in the United States that could help, but that's not new. It's not sensational. We all already know about that. So I'm not sure that we have great reason to push up to the 70s. So when you see this right here, you say to yourself, did they just do nothing? And you know, you kind of look here, it moves up, and you see tension, well, sort of moved up a little bit, but it really didn't advance. I mean, if you think about the volatility we've been looking at, these types of moves, and you look at that and you say, this, you know, they didn't really hit here. Tension curls up right into a bearish position, which they hit, turning this position upside down. And I'm looking at this going, ooh, this looks like a real on the fence nod. And I'm considering teeth. So the question here is this a nod to kick off elasticity to bring tension down? Because that would be the purpose of it. Or is this just simply teeth we're pushing down to pressure, you know, anyone who's trying to get into their secondary position and looking for their stops, and then we can move back up? Well, I think it's both. I think that the bulls have enjoyed a very nice rally the last couple days, almost no pressure. And this is clearly just a secondary position. If you think about it for just intraday, if you ignore the rest of the trend, you would probably be looking at this as a root position, and it just got worse throughout the day. So intraday-wise, the bulls, they don't really got a lot. So now this gap's starting to look a little bit better because they didn't pick up any bullish positions at the open. And then we have a position right here that's sort of struggling, and it looks like a nod. I mean, can you see how that you could put these together and you can start to say to yourself, well, maybe this is sort of toothy, but on a little bit higher time frame. We get a nod here, bring the market down. It's very aggressive. We get to burn off some tension, and then the bulls get a much better chance, and they hit it back up, and then we're at that phase. So I think elasticity makes sense. There's no bullish position in the lows, and boy, do those portfolios love their positions in the lows. We got a bit of a miss here, and the bears hit. They took it. I think this position right here, I'm interpreting this as the bears saying, okay, let's give it a go. And their objective is to drive it down. And of course, one of the first things they probably would want to do is, you know, get this loser into a winning position. This will cause resistance. The market doesn't want to pay you. You lost money already. We don't want to pay you. You did terrible. You don't get a play. That's just, in my head, that's the way it works. If you're not going to participate and win and contribute, why should you get a payout? So that's the way the market's going to look at that position right there. So these guys are going to need a way to get through here. Do they have one? Well, they got 3 of them right here. So what we're looking at is for the market to hit, which we have, and then to see some acceleration down, and that'd knock these guys out and would absolutely help us get through this position here. And we are in this situation all the time. If you haven't noticed, we're always in this situation where it's like, can the bears run an algorithm and get it through some resistant area? This is like this, it's like the same analysis every single day. So right here, the bears, yeah, they got some folks here that would be willing to pay. You know, they got into their
together.
Well, what happens if you put the word toe and nails together? Sorry, hold on a second.
Nails.
Toenails? What do you mean? So you could just put words together and it makes other words? Huh. Can you think of any more? Okay, you go think about it and come let me know. Toenails.
And nails together, what?
Finger and nails. What is it? Fingernails. That's so great. When did you learn that idea? You just figured that out. Okay, so I think right here, the bears have what it takes. They got what they need. They got what they need. I think that it is a sensible thing to drive this down, do what they can with this position. I think this is going to give us a lot of fuss, though, because it's a loser turning into a winner, which means you're going to pop the liability in the market. And boy, markets do not like liability pops. So we got what it takes. But I think the objective here is if these bulls, you know, offering us a nod, if we could get price down here, maybe even close up that gap, and we get tension down tomorrow, that would be just perfect, because then we're not looking at 70% tension on the next rally. Too hot. So a good move down, you know, on this, if you're sitting here going, and this is one of those things price action does that it's sort of easy to see after the fact. You see there's sort of this, you have to remember, this is intraday. We're not looking at overnight. But then if I went like this, you could almost see this, and then you'd say, oh, it was just like internal trend line. Oh my gosh, and look, support, resistance. I mean, do you see that? This is one of those things that's like, you can kind of see how that we're not going to really be disrupting that slope that the price was moving at, even though it sort of looks that way with this. I think it makes sense. Come down, give this some pressure, and then the bulls can take a look here. And we're not really destroying the trend, even though it could really feel like you're about to get your face ripped off. I don't think so. I think this is a elastic market that's coming down. So we just got to break through this level, and then we get down to the gap. We can blow off some steam. The bulls will get their chance to come in. Now, remember, elastic markets are your foot in the door. So the bears, yeah?
Can you open those?
Sure. There you go, buddy. Yeah, can you put this in the trash, please? Okay, so the bears are going to get their foot in the door here, and so they're going to play nice up until the bulls want to regain the control over the market that they've enjoyed. That's attack time. So they're going to play nice. They drive this down, and then they let the bulls have what they want. Everything's nice, but then that moment when tension, you know, if tension, we get tension to come down and cool off a bunch. Right when the bulls are like, oh, let's hit it. That's when the bears. So the bears are eyeballing that. So what the bears need to do through this section, which I think this is where we're headed, what they need to do is just destroy everything on the way. Just kick everything down. Do as much damage as you can on the way, so that when the bulls have a chance, they don't have a whole lot of structure to operate from.
It's okay?
Oh, okay. Well, you eat that one. It's a creamy banana, the best one. I'll fight you on that. The banana is the best one. Strawberry is the second best. Okay, so they need to kick and scream all the way down. Just break things. So you might ask yourself, well, what does breaking things look like on the way down? Well, maybe we turn over some good signals. Maybe we see some big shifts in numbers that matter. Yeah, you can, but go plug that tablet in. Take out whatever they can on the way down so the bulls don't have a great place to operate from. The other option they have is where you keep the risk too high, where it's like, you know, it's coming down and the bulls try to buy here. but like the next position's maybe down here, and then you say like, oh, this is a lot. Basically, there's a lot of room to where the next stops would be, and it sort of makes the bulls uncomfortable. And this kind of discomfort can create some gray area where the bulls aren't sure if they want to participate there, and that can destroy the whole setup because liquidity can't be turning upside down. And so if they're not really sure, it can cause these issues, and that can help propel a bearish market down aggressively. So this is another option they have, is just this a lot concept. You're sitting there going, oh my gosh, I've been waiting for the bulls, and it's like perfect everything, just need a stop of no 50 points. And you're gonna go, nah, I don't think so. So you could take an option position, but then you're forced to go way out of the money, which cuts way down on your profits. So then you might say, I'm not sure. Good job. Yeah, you can watch the TV. So then you might just skip it. And that you can watch YouTube, but you're gonna have to keep the volume down. So those are the two options. Just a second, I'm gonna get him going on something, and I'll be right back. Okay. One thing I don't like about this little stream day. Okay. So those are our options when it comes to how the bears can structure getting more out of this elastic market. That's a really big deal, because if you understand the mechanics of what they have coming up, you can expect it. So you'll do a better job of understanding why they're doing things, what they need to do, and usually if you follow it along, you kind of tell what they're about to do. So I think that those are their two choices. It's not super clear to me which one's going to happen, but I'm aware of them. I think either one should happen after tension gets down further, when we get in this area. Not this area. This is just too far. So when we get down here, start thinking about those, and watch how they work this out. So the next thing that we're looking at right now as we go into attack time, because I think if you're a good bear, a good little bear, during an elastic market, really all you're thinking about is the day that you can take out those bulls. Because if you push the bulls into a situation where they messed up or they get trapped, especially with something like this, they're going to be trying to sell out while you're selling in to pump the market, and you get really those big bearish moves that the bears all seem to like. So that's what these bears are looking at. In my head, that's what they're focused on. They're not thinking, oh, this and that. They're focused on this elastic move. They're thinking, how can we work this out? Can we get something aggressive tomorrow? How do we structure? So their minds are all a day or two out. They're all out here. I want to point that, because I think that's the mentality of the bears right now. The bulls are thinking, okay, well, we got a really great move. I think a lot of bulls probably dumped positions here. If you didn't, you're crazy. It was just like a huge payout. Clearly, it smelled like a blow-off. We all know what those look like. And I think the bulls took some profits, and they set up this little nod here. And they're going, all right, well, bring it down a little bit, not too much, and then we'll pick it back up. So I think that's the mentality of both sides here. So as you can tell, my thinking is this. I think that's the most sensible thing to happen right here. Now let's talk about the other things. What if we don't go down? What if the market goes up? Well, if the market goes up, what's going to happen here is this market then forces everybody. It puts all of our brains into a prison. We don't have a choice anymore. We're not free to imagine. Forces us all to look at this number, because if this goes up and then tomorrow gaps higher, all of a sudden we're going to be at 70% just quick, really quickly. It's an issue. And then we start going, why are we here? Is there something I missed? You don't just get to 70%. Look at this. It took us 4 days. I mean, 3 days of 4 total days to get us up to 50. It took a lot of work. You know, these kinds of moves are great, but it didn't get us up to 50. This is the amount of work. So it's just like, I don't know. Maybe you guys know of something that's just absolutely nuts. That's going to get everyone really excited to just blow everyone up to the, you know, I know there's a lot of permanent bears out there. I know the market's really pumping the idea that the market's crashing right now for some reason. I know, and they'll probably get stopped out, but they always get stopped out. That's not new. It's like, is there some reason for a flood of demand to come in suddenly? And I just don't see a whole good reason why we can't burn off a little bit of tension and then keep this train moving. Well, I don't have any reason that would counter that. So if we move back up into the close, the problem here ends up being, why didn't you let it burn off, bulls? Why'd you come in here? Or the bears, why did you guys cover? What's the deal? Why is it you had a great opportunity and you decided to forego that? I mean, everybody wants us to, I think the bulls and the bears want this to go down. So I have to ask the question, disagree. So what am I missing? What's the deal? Was this just teeth? I'm not sure it was teeth because I would have had a bullish position down here. I think this was just blow off. So that's the question I'll be asking. And I don't expect that to happen because it doesn't make any sense, like at all. Maybe a move back up here to test like this area or something, sure. Things don't have to move in straight lines, but I don't think that moving up to here makes sense. Now, if we move sideways, what does that mean? For me, I'd be going, well, this is just retail push. Oh, controller died. Hold on. I swear, the Stream Deck that I got, it's got a static problem. Every time I touch it, like shuts off for a second. Let's see what I can do this. All right. So a retail push is just hold it to the close, and a lot of retail dumps their position because they can't stomach it. You know, if you're short and it moved down here and it closes like this, they probably do something like this, whoop, right into the close. You dumb. Retail's not going to hold into the close on a bet that's short in a market that's been doing this. They just won't. So I think sideways would look to me like a retail push, just forcing everybody out. In my opinion, it looks like a nice, clean, right? Very retailish looking thing to do here. Head and shoulders kind of thing. So I think there's a lot of people who looked at that, they saw it. I think that it had some curvature to it. It was a crazy blow off with this. There's a lot of things here that could get retail trying to short this. So if I saw that, I would think that a lot of retail has shorted it. And the objective here is to trick them. Now, I don't know that that's the best option. I don't think it is because we have people to pay. So we can handle that liability. We can handle paying a couple of retailers who had guts. Sure. I doubt there's many, but I think there's probably some who've got some guts. My assumption is after a huge move like this, there's just a ton of FOMO in the market. People are just so terrified that the general public is likely trapped into long positions, especially on this nice, I mean, from a price action perspective, it was just like huge move up, a little trouble, and then right there where you have this idea, right? That was the idea. And so a lot of people jumped in right here on this idea of a continuation, and this is the second, I'm going to do Roman numerals, the second leg I think that's what happened, because that makes more sense to me. But nonetheless, there are some things I think that retail could have seen. Crazy blow off. But we have trapped people to pay for it, so I'm okay with that. So I think the most reasonable thing to do is to move down. We've got what we need to push through this position, and we could see a response from it and then push down. And the objective here is to get down to these areas. I think closing the gap would, that's just the most obvious thing that's on this chart right now. The place that it really wants to go is to get back to the last major spot the bears got trapped at. So markets are built off trapping bears in. So I mean, if you scroll back in your charts and you look for the place where they got trapped at, I'm not going to do that right now, but if you look for the place where the bears got trapped at, that's going to be the first place to get to. Like this one, we want to get to there. And if they can get it to some level where the bears got trapped in the past, they can get out of that, deleverage if they're still in it, which would be nuts if they were, but maybe they are. So that's what I see there. Let's shift gears a little and come over here and take a look at the volume profile. We have an expansion target here. Market. Let's make it yellow and show the price. We'll round it. There we go. Okay, so right about here, 39.29. I'm going to go above that line. I'd rather 39.30. Much prettier. Okay, 39.30 right there. Our expansion, we have an expansion. Now, notice it's still backfilling, so this is still trying to acquire enough volume to basically, cover the volume it cost here, some amount, and it's still backfilling. So typically you don't get aggressive moves in a direction until you're done with that. Not always, but as a rule of thumb, that's the way I use that. Looking at some of the other charts, we have dollar cost. So this is dollars leave. Somebody took profits, dollars going down, which means people didn't want dollars. They wanted something else. So it's like out of. So I think of that, out of. They were going out of the dollar into something. So if you're buying ES shares, you give your dollars back and you take the shares. It drives the value of the dollar down because it's a supply. The debt, we had a sort of retest of that support area there. And generally, we saw kind of like a skid down today, but I don't really look at that as down at all. Like it just, maybe it's just me. But when I look at that, I think, nah, it doesn't look like down. It looks like up to me. That means the cost of debt is slowly making its way up, even though today had a little bit of a skid. And it's making its way up because there's demand for it. It's going off the shelves. It's going to go off the shelves. Somebody wants some debt, so let's make it cost a little bit more. Outside of that, not a whole lot of interesting things going on. I think the gas prices are interesting, but that's not new, right? We all knew that. We knew that. So looking at this, it looks like somebody has injected capital into or value into something, and it looks like it was the ES. See that? Because this goes up, this comes down, a little bit of debt in there, and you like to debt saturate because it means you can get larger positions for less capital in your trading account. And the gas prices are going up, and I think that's probably going to keep going up for a while, but that's where we are. So it looks to me like we have some decent cash saturated positions coming in here. Whether they're long or short is not clear here. What's clear is that there are shares getting consumed on a larger time scale, which would be this whole trend we've had. So I'm thinking we scoot down, elasticity. We see there's positions here. We see debt shoot up as they get into a major swing secondary position, and then we wait to see if the bulls can wrangle that at that point. Last set of charts to look at here, and to be honest, I think this is the least interesting. We've had the best fit vectors just showing the way as usual. And this is something that happens. We had our really great signal, and this is just, I just love this indicator. If you don't love this indicator, you're nuts. Gave us a signal, the churn, and the spike down where they didn't really keep up, and that was the low. Just did such a great. I just love stat ADI, don't you? So it goes up, and this is a thing that happens in uptrends. You know, you get these really strong pushes to the upper limits, and yeah, they were okay sort of signals down, but if you look at it in the overall trend, this is a common thing. When you get a really great low setting up and the structure is perfect, you have to be careful trading those counter trend signals because a strong upward push drives you up to these levels. And so when I look at this, yes, I do pay attention to these over the top ones, but I don't pay attention to the upper ones as much. I look at them as pivots because it does a good job. And then basically the market's going to have a hard time getting through those pivots. Then when it finally gets through the pivot, which this time it did, then you come back up and it has a hard time with the pivot again, and then you get over it. So it's, you know, I look at those upper ones as pivots, though I will cover there. Under the conditions, especially with the way that tension's looking in the trend and everything, it was just so beautiful. It's just such a beautiful trade this whole week. I don't consider those as counter trend signals so much as, you know, it's a stopping point. It's a place to deleverage a little, cover a little. It just worked out really perfectly. This has just been like one of the easiest, most wonderful things that's happened to us in a while. But you could see the low. I want to point this out. You could see this is the kind of stuff you look for out of these major pivots. Once you get the structure in place and once you get the correct looking things and the response out of it, we're looking at major trends here. And then you'll see those things respond. We had some other stuff too, but I just wanted to point that out so you could see how that's developed over time. Anyway, back to here. Now we're getting what we wanted. Price moving down. So let's see, we're at 39.36. I'll just sit right there, 39.36. Let's see if we can get this down. Now the level here, I don't have marked. I'm going to mark it on this one. Again, I think in ES terms. So I'll mark that off to the right. Let's take 32 and say that's because the position's not going to be right at that. It's going to be a little bit lower there. So 32, that's the level that they're trying to get through. We only have a couple minutes left. An algo at this point would be nice, but I'm just going to go ahead and guess that this is probably going to be going on tonight. Yeah. So I think that overnight prices will probably do something like that. And then you see this pivot here, the one where there was just bullishness coming in. It wasn't a position. If we push down, we'll probably see a little bit of a response after ticking through that low. And then the next objective would be here, something along those lines. And it could do all sorts of stuff on its way to get there. Just the bottom side, that's what I think it should look like. Yeah. Now I want to say it's common to have a situation where that you have the initial bearish position that had responses and everything, creating a support later in the day. That's common, and we see it a lot. Today, though, we don't have any bullish positions still up here. So this is the thing that changes the narrative for me. It changes what's going on. It's because we didn't have any positions down here. So I think the bears have what they need to push down through that. Where normally I would say, this is the spot to get to, and then just sort of bounce off of it. But I'm thinking we push through that level if we can, and then tomorrow we get elasticity coming into the market a little bit more aggressively, and we could just open flat for all I care. Tension could open right here and then move down, something like that. That's really what I think is the best scenario for both parties. Moving down, releasing some tension, the bulls pick it up later on. Outside of that, that's all that I've been tracking and that I see going on here. Is this little counterplay where the bears have a little advantage that they're trying to take advantage of. That's about all I see. There's not much else going on. I think the big question for the major longer term, this whole trend that's set up since last week is, should the bears cover? And over the much longer term, I don't really see a whole lot of bearish stuff in the market. I know a lot of people are talking about it, but stimulus checks, states opening up, businesses are going to get moving a little bit. Hopefully we get a little cash flow increase going on if people could get back to work. Though Biden's making that a little tough, keeps incentivizing no work. You're supposed to give people assistance as long as they're contributing or trying to contribute. You're not supposed to give people assistance for not contributing. That's just stupid. It's just stupid accounting. It's very dumb to give people things who are not contributing. It's just a great way to spend all your money. Terrible business practices. Excuse me, accounting, because the United States isn't a business. That's not true. So I think we should see some cash flow coming in. We're going to have stimulus checks. I don't really think there's a whole lot of bearish stuff unless something nasty's coming that I just haven't seen. And I don't think that's true. So I think short-term bearish correction here, and then the bulls take a serious look at buying in. So if you're long-term bullish, you should have picked up a put or something today. This is good reason to pick up a put to hedge and ensure your long position. If you think that the market in general has no good reason for, the market cap. If you think market cap's going to stay up and continue to rise as people spend money, you should just be insured. If you think that printing money and the economy opening is a terrible idea, then you should have covered your position because you think that the market cap's going to shift. Maybe you think small business is going to take away from the Walmart, Amazon, Target monopoly or whatever, and that market cap's going to shift, and maybe that's what you think. Fine, then you should have covered. But I do think this is going to be a pretty decent downside move, and hopefully I've explained that pretty well so that you can see it coming. I haven't done any videos because there have been absolutely nothing to say. There's just nothing changed. Today, I saw this and said, gotta make a video because now we're back into the nitty gritty. Things changed. So this is what it looks like. Oh, my glasses. This right here got me to think that the conditions are changing in the market. And so I had to pop on and say something. If you're holding long from that position last time I made a video, awesome. That's what you were supposed to be doing. Okay, 2 minutes left. I am done on here. I gave you my expectations. I'm not sure what else I can say about it. Tomorrow, looking for an elastic move down. It would be really great if the bears could pick up another position, but they already got one today. They don't need another one. So tomorrow could open and just runs down as they ride tension releasing. It would just be nice if they could get another one, but they don't need another one tomorrow. All right. I will be on here tomorrow to update how the elastic move goes. See you later, guys.